So the real key is, it's one thing to raise capital, but if you can raise a syndication of capital, that's the best case scenario for an entrepreneur. But how do you find the right syndication, the right due diligence, the right group, the right lead? The mythical lead is out there. And also we're going to talk a little bit about international. That's also a big trend, is a lot of these international family offices that want to invest in U.S. So we've got a variety of groups that are coming together that are working to be able to put together international syndications. So we want to chat about that a little bit. But let's go ahead and get it started here with just a couple minutes of introduction. We want to learn a little bit more about our panelists and their co-investment groups, their syndications. Obviously, for those of you here before, you remember Andrew. He was our case study at our last event where we spent a half an hour really diving into family office networks and how they came to be. And so we're fortunate to be affiliated with their organization, as well as Dan from Opal is here, along with Becky and Margret. Thank you guys so much for being here. Let's start on the far end. Dan, if you could spend a minute. It's been a great relationship between Keiretsu and Opal, being able to bring our deal flow. Terrific organizational conference company. They do a variety of topics, but some of their flagship events are around family offices. So, Dan, welcome to the Great Northwest. Glad to have you here. If you could just spend a couple minutes on kind of Opal's background and how you guys came to put on these activities and kind of how it works.
Yeah, thank you, Nathan. I appreciate that. We've had a great relationship working with Keiretsu Capital and Opal Financial Group. If you guys don't know, we've been around 20 plus year, going on our 21st year, doing institutional and high net worth family office conferences. Just had our Legacy Conference out in Newport, Rhode Island. See a lot of familiar faces out here, so that's our Legacy Conference. Been doing that, about its 13th year. Brings upwards of 1,000 participants over the course of 3 days. So, been with Opal Group with 6 years now, going on 7. Doing these high net worth conferences, running business development, working with startups, working with hedge funds, being the liaison between family offices and other service providers in the industry. So, proud partnership with Keiretsu Capital, putting deal flow together with great entrepreneurs, with funds, GPs in real estate, cryptocurrency, cannabis investing. So a lot of different deal flow being in the industry. You hear different topics, trends that are coming about these organizations. And one thing I would say, networking, trust, it doesn't happen overnight, right? So attending these events in particular is a key thing with growing your business and growing relationships. So appreciate being here, and thanks for having us, Nathan.
Yeah, so Dan, Opal, I would say, is more of a content-oriented organization. So there aren't people giving pitches. So maybe talk about how does a family office or an entrepreneur who wants to get to know family, how do they participate in that kind of a group? What's the participation framework in terms of being a thought leader or whatever it may be? What are the roles that people have in the events you guys put together to connect with other family offices?
Yeah, Nathan, I think that's a great distinction. Like, Opal Financial Group, we value the content side of things. The emphasis of us is the educational networking aspect of it. It's the educational panels, their speakers. So, you're going to talk about your firm, you're going to talk about your values and where you see performance and trends. But, being a thought leader in the space is so much more, providing that expertise where families don't. You might be a manufacturing firm, how to put an event, and that's what that's where you tend to invest. But everyone knows you can't put all your eggs in one basket in manufacturing, right? So you want to branch out to real estate, you want to branch out to startups. So having that educational content panel, kind of what we're doing here, and the real estate panel before, you get to hear where experts think the cycle's headed, right? So we're in the 7th, 8th inning in real estate. Some people think recession's 10 years down. So you hear this thought leadership. It's very much important to engage the family offices directly and take that step. No one likes a hard pitch. I'm going to give you 100x return if you just give me your money today. No one wants to hear that. They want to hear the value and they have the educational aspect of the value you bring from your company and from a startup.
Exactly. So the Opal team does a great job making sure the right companies get in the right situations to be able to express their thought leadership, their expertise, and then be able to have that be a valuable way of getting those conversations started and finding that common interest with the family offices and meeting the other groups. So thanks, Dan. Becky, if you could, just a quick introduction for yourself and your group and a little bit more of the international flavor and what you're seeing happening there.
Okay, I'm happy to be here. Actually, I got to know Keiretsu through Opal. And I attend Opal's conferences for about a year. I come with a background of 3 decades in financial services, serving mostly the American banks. I am basically from Hong Kong, serving mostly the Asia Pacific, but I'm moving to Manhattan, so my base is basically between US and China, Hong Kong. A lot of things happening in Hong Kong, so I'm happy that I can come out on the plane on time. My family office experience is dated back to working for banks like Citibank and HSBC, because they are top tier banks in Hong Kong, so we serve family offices, so we have ultra high net worth individuals. So that's why when I do the investment, I serve mostly these big investment offices. And as a banker, we have a team to educate them how to do and form the family offices, like governance, strategies, and everything. I moved out of banking about 6-7 years ago, and then I went into asset management. So I myself is licensed under Hong Kong SFC as asset managers. And my primary jobs is to, assist with my valued clients to do a lot of cross-border transactions. And everybody knows that, China invests a lot overseas, but my base are mostly Hong Kong and Taiwan, so Greater China. So instead of just bringing them to invest in US, I start to hear other family offices in US, they also like to invest in Asia. Actually, Howard was on my panel when I was started to with Opal this April, so I started to having the passion of joining this and sharing more with all the others. And I come to Carousel, actually I know Nathan for a year, and I told him, sorry, maybe I couldn't be doing too much on those like growth or like early stage. However, when I went back to see some of my family offices, they start to do that, and one of the big ones, they just in a year, they build up probably close to $1 billion in life sciences. So when they asked me, what are you doing in New York and all these, I'm more in the East Coast. So I said, I visit some Boston, and I found them very good. So they like me, why don't you bring it to me? But my expertise is like the panel earlier, actually I'm on property. But I also like to be in healthcare and life sciences, which Nathan has done a great job. And I have covered a lot of other sectors. And I read a lot of research about family offices from all the publications, and I go to Bloomberg. So I leave to others to talk, and this is my background. Okay, I'm now in Hong Kong as asset managers, and Globlex is a joint venture company with my CEO. We dedicated entirely for cross-border.
Excellent, thanks Becky. We appreciate traveling over, and when we talk about raising capital is hard in general, raising capital internationally, you've got to translate culture, you got to translate language, you got to translate currency, and so having intermediaries within the Kretsu Global Network, we have chapter presidents in each area. They understand the local families, the local investors, and so again, I think there's going to be a similar thing where, as we're able to actually get transactions going, there's going to have to be some intermediaries that are helping to manage those investments on behalf of the investors coming from Asia into US, but it sounds like there is a large amount of demand and interest. Any thought of where you see that going, and any particular organization trend? It seems like there's more representatives, that they're sending and setting up offices here in the US to be the front door for those accessing those investments.
I will be doing that. I'm trying to apply for FINRA so that I will be regulated. And because the Hong Kong's international center, so even if you don't have that qualifications, I think the way we do things are very similar.
Excellent. Margaret, thanks so much for coming up. Sorry we had a little flight trouble there at the airport, but it does rain a couple days in the summer here, so glad we're able to get you up here. Philanthropy is something we talk about a lot within the family office community here in the Northwest. We have such a deep philanthropic community, very passionate, many entrepreneurs who've been the most successful here in the Northwest have a huge impact in that area. And for years within the Kretsu community, we wanted to support impact investing and getting people to be able to make investments in areas where they can also do good. But it's been a tough crossover to look into. And so as we've been working with Margret the last few years, we've been very excited about the innovation that her syndication and investment organization has brought to the market. And let Margret, if we get a little background on yourself, kind of how you guys came to be able to syndicate impact deals in the way you do. And obviously that, I think, is a big growing opportunity within the family office market. They want to do good, but they don't want to just they want to get the kids involved in actually being involved in investing, not just donating, I think is a long-term trend.
Definitely. Can you hear me okay? Okay, terrific. Well, thank you for having me. I started my career in institutional money management on the alt side, and after business school went into corporate strategy and acquisitions. And then the last 10 years I've been working for a small number of family offices at the board level or the investment committee level. And just recently I joined Impact Assets as the President and Chief Investment Officer because it was just too fun to pass up, although I'm still on the boards of many of the families I used to work with. So Impact Assets is unique in that we are a nonprofit. We're also an impact investing firm. We manage $1 billion and $7 million now. We're actually over the hump. We're not just rounding up. We do a tremendous amount of deal flow every year in early stage investing, both private debt and equity across all the stages of the companies. Last year we did 108 deals. This year to date we've already done 86. We've deployed nearly 30 million across those 86 deals, and we've got, I'm staring down another 40 million in the pipeline to be executed just in the next couple of weeks. So we're growing fast, we're doing a lot. We measure ourselves on every, whether we think of ourselves as an investment firm or as a nonprofit, we measure ourselves on the velocity of capital to impact. So we're really motivated to do deals, we're motivated to put things in front of our clients. We do that mostly centered around the impact themes, so impact investors lead with whatever drives them from a mission or a passion perspective. So we think about, instead of thinking about sectors, we're thinking about impact themes. And the types of things we do are centered mostly in climate solutions. We also invest a lot in access, whether it's access to education, access to loans, access to capital, non-traditional career paths, all kinds of things. We invest in, some of our clients are really focused on investing in women, so it might be a product or a company that does something for women. It might just be a women-led company or one that has great gender diversity on the board or in leadership. Everybody sort of has a different take on that. We invest in, also we do a lot in clean tech, we do a lot in education, but we basically do everything. It's our clients who lead what's on theme for them or what's on the strategy for them, and it's our job to source the deals that fit both their impact objectives and their investment objectives. So we have a dual mandate. And in case anybody still thinks that impact investing means you're going to lose money, it's up to you to choose. If you want to have an investment strategy that is market rate, we'll do that. And if you want to, if access is one of your themes and you want to give a below market loan to people who don't normally have access to loans, you can do that too. So it's up to our clients to set strategy on both sides.
Excellent. Thanks so much. Andrew, please, a little background for those who may not know Family Office Networks. You guys have been kind of involved from the beginning of the formation, this new trend here the last 10 years. Have chapters, have groups, have meetings. Just talk about how deal flow syndicates through your guys' group and kind of a little bit maybe how the model started and kind of where the model's evolving for you guys.
Sure, absolutely. First, I think everyone can hear me. Thank you, Nathan. You've done a tremendous job in putting this together, and very glad to be part of this panel. Basically, for those of you that don't know me, Family Office Networks is a company I founded about 7, 8 years ago. And basically, I saw how fragmented the family office industry was. I literally Googled the term family office about 5, 6 years ago and was amazed that only 2 or 3 websites came up tracking a $12 to $15 trillion industry, and was really surprised why there was such a disconnect between family offices and other groups that were trying to get access to these family offices. And that led me to launch Family Office Networks. The goal is to bring family offices together so they can share ideas, they can co-invest, they can meet other like-minded individuals, and then to eventually start cross-marketing other products and services, anything from wealth management products to estate planning to luxury goods and services. And since I launched Family Office Networks, the growth of a number of family offices have more than doubled in the last 5 to 10 years. And we're seeing a tremendous amount of companies target family offices to get funding, whether it's biotech, cannabis, technology. Family offices are the most sought after type of investor because it's the sticky money, it's the relationship money, and most importantly, that's where the referrals come from. And what I did was a little bit different, but I believe it's working very well. When I launched Family Office Networks, I live in Palm Beach, I've been there 17 years now. I launched the Palm Beach Family Office Association. I've been doing events there for many years, and I just saw how useful it was bringing families together and started seeing them share ideas and watch them co-invest together, which led me to start launching other associations. I launched the New York City Family Office Association, the Connecticut, Boston, and about 30 others. Each one, we do these very high-end events, bring local families to the events, build relationships with them. Our target is that $50 to $500 million family. We don't care about the $1 billion plus ones. Those are more quasi-institutions. And by bringing local families, we're able to find out what their, we'll say, objectives and goals are. And then we get permission from them to go back and introduce different products and services. The way we monetize it is I own a broker-dealer, and we introduce different products to the broker-dealer and or to our investors, excuse me, to our investors, and we get compensated through the broker-dealer. If I can just touch upon the co-investments. The co-investments and the syndication is something that I have seen grow faster than any other part in this industry. If you look around, and I've been traveling around this country for years, more and more deals are being done by families co-investing together, instead of just one family putting all their money up. And we're seeing it more and more and more. Certainly in South Florida, there's all these little clubs that I'm a member of some, but I know of many. That's the way deals are getting done. And we recently launched a few of our own investment clubs. One of them, the Old Women's Investment Club, which you were talking about before, Margaret, and that by far is our most attractive one, where we have the most members. We also have the Palm Beach Investment Club, the Cannabis Investment Club, the New York City, and a few others. So again, the goal is bringing families together so that they can share ideas. By co-investing, they can get better terms, negotiate better, and spread out the cost of the due diligence and many other great features.
So as you can see, there's a whole variety of ways that companies and investors can get access to different family office co-investors. With Opal, you've got more of a content model, you being a domain expert, offering your expertise as part of a panel discussion, a booth, participating in social activities, again, event-driven. You've got Andrew's model, who's more professional services in terms of setting up specific events for specific clients, and then having different ways of, if there is capital raised, be able to monetize that. Margaret's got more of an investment advisory type component, where again, aggregating investment capital, processing deal flow through, managing those investments, and making, kind of internationally, there's lots of different ways, organizations and different business models, and these are evolving. As more and more family offices are trying to come in and learn and access, there's different ways that they're affiliating themselves based on kind of their own level of maturity, expertise, and then beyond that, there's kind of the super secret events that happen that you only find out about once you meet the right people at the events that are a little more public. Then you get invited in kind of the backroom opportunities, and that's where a lot of the deals happen. And so it's been a lot of fun investigating it here the last few years. Let's talk a bit about how the syndication happens, how as an entrepreneur, an investor, how can we actually get exposure and really begin that relationship. So maybe just each of us offer a little bit of advice. What's the best way to set yourself up for success when you're looking to build that co-investment, to work with a syndication group? What's the best partner to find? Yeah, maybe talk a little bit about the groups that have had good success with you guys.
Yeah, I mean, everyone wants to find success. That's why we do these events. That's why we want to work with family offices. That's why we want, in life, right, to be successful. So I think just being honest up front with the investor, with the person you're sold after, the partner itself, just being honest up front. I think that's the best way to kind of get in front of family offices, upfront about your objectives, what your exit plan is. Just honesty is a big key, and I think you'll hear that echoed sentiment throughout the whole conference, is just being honest, trustworthy, having that factor of building the established relationship over time and not forcing, hey, write the check, we need to do now. No one wants that. That's, again, a first sign of fraud, in my opinion, right? Just sign the check, let's go, let's do it now. So that's, again, one of the first things I would say is honesty, trustworthy, getting out there, networking, and just again, being open and honest with the individual you're working with.
Thank you. Maybe talk a bit about, what's different about international syndication, what the clients you want to work with, how do they have to prepare themselves to be able to, really get interest from an international investment organization versus just local here? What are the steps that companies or
Well,
managers have to go through to really be of interest to you to take and offer to family offices that you would work with?
first of all, family offices that look for cross-border, they must go to certain state. They must get the appetite to service within their region or territory. And Asian, the first leg, they will go to China. But with all these technology and the growth in other countries, they also look outside. So basically, mostly, these people look for international transactions are really big. So they look for $10, $20 million. I tend to be agreeable to what they do, and they really look for private equity, VC managers, and they want to co-invest. Partly because they don't have the expertise, they have a lot of money to deploy, but they don't have the resources to find the deals or to do the due diligence. And as we in Asia, we know we are very entrepreneurial, and actually the angel funds are very active in China, but they are China, so it's renminbi denominated. So I don't touch that too much, but in Asia, people do it by trust, by relationship. So the family offices usually work with their own cluster of friendships. And as the world grows bigger and the technology is getting more advanced, they know they look outside. So actually some of my family offices, they have their own offices in Seattle, maybe in San Francisco, even New York. But the team is still not as being able to reach out as much. So they are looking for deal flows. And there are some family office associations grouped in Hong Kong, but I have to say that it's no way to compare here. I don't want to just play down there. But this is why I like to come here to see how we can do this better. And that's what I offer to Opal and even Carishu, whether we can do the chapter. I know that they're doing it in Shanghai, Shenzhen, but Shenzhen will be really the world-class study that they will rival the San Francisco Bay Area. Things are happening, so I always like to look forward and be more visionary. So this is something this family office is also waking up, and they will do it. And there are a lot of them coming to US, more than to Europe.
And so as you're looking to go international, whether it's Europe or Asia, again, these groups are going to want to understand what is your go-to-market strategy in their particular domicile. So they're going to ask you that question. So be ready to answer it. What's your China strategy? What's your India strategy? What's your Asia strategy or Europe? When the companies get to the point where they're looking to do that kind of expansion, bringing on family office co-investment partners in those regions can be an incredibly effective way to drive growth and really have that local knowledge and support and capital base to be able to support the company's operations in
Yeah,
those areas.
Nathan, I want to add to that. I think people mentioned earlier in the panel the culture, language. Yeah, you can employ the staff to do it, but when you really have to build partnership, it's the trust. I think same in everywhere. And you can always recruit with professionals to do all the jobs. But when you really want to partner with somebody, like a marriage, you need to feel having the trust with the other party. So, I heard some American family offices were saying, oh, I need a partner. And actually a lot of pension funds, I heard some top people, chairman or president speaking in Bloomberg. They told me also they really want to find the best partner in China, and then they trump them with $100 million. So I think the same happened into smaller tier, middle market tier businesses, which is actually what is most needed for family offices. The big guys have a lot of money, a lot of professionals to help them, but like mid-market and smaller family office, like 500 million below, they really in need of the trust and the connections. And I found out from the research, the return for those mid-market deals are actually better than the big deals. Yeah.
And it sounded like from what Howard was saying, they're used to some pretty big returns, so make sure your hockey stick is in pretty good shape, because they're not conservative there. They're looking to hit some home runs, and these are big market opportunities. Margaret, maybe share for a little bit. We've been impact investing, clean tech investing. It was called back in 2006, 7, 8. Kretsu, I think, was the first angel group to set up a clean tech investment group way back in the day. It was tough. A lot of passion for it, but boy, not a lot of exits. A lot of tough haul along the way. So it's very exciting. But generating that liquidity has always been tough. But there's still so much allocation that wants to go to impact investing, but still needs to get some kind of return and have some kind of liquidity associated with it. Can you talk about the types? If there's an impact opportunity, what do you guys want to see in terms of their metrics, their benchmark? How important is it the impact KPIs versus the normal financial diligence items, and in terms of being syndicated with your process, your team? How organized do the companies seem to be in that regard for you guys to be able to put their best foot forward with your investors?
Well, we do require impact reporting. It depends on the company and what kind of impact we're hoping to see from them. We do have just as much rigor on that as we do on the investment side. We're looking for authenticity and genuine commitment. The capital has two purposes in our mind. We have had some great success since the tricky time in clean tech. I think what is really encouraging about that is that the business models are changing, the investment structures are changing, they're addressing gaps in the capital market, and we're seeing the kinds of returns we were hoping for back then, and liquidity. And one of my favorite investments, we've tripled our investment in 2 years, and we're looking at about 25% liquidity already, as the big institutions are trying to come in and start eating away at or getting a stake of the asset base. So I'm pretty optimistic, and I think as we invest, getting back to your original question about co-investing, as we invest, we're looking all the way through the capital stack. We're investing at multiple stages. Our check sizes range from $25,000 to $10 million and up, depending on who the investor is. And co-investment for us looks like trying to find something that's going to be interesting to a wide variety of people. But we're looking for at least one of our larger check writers to be interested, and then we're happy for the $25,000 check writers to follow along. It's no extra work for us. It's fantastic when that happens. So that's kind of how we think about structuring that. But we also have an eye to all the different stages in the capital stack and what's happening after that. Who's on the cap table now? Who's coming in with us? Who can make intros or will continue to invest through those stages? And what might be of interest later to, it's not just IPO, right? What in the case I've just described, these are pension funds who want a balance sheet business that's owning very unsexy infrastructure, solar panels and storage facilities, right, and leases for that kind of equipment. So we're evaluating that all the way through. It's not just enough to look at the deal and the round.
Thanks so much, Margaret. Andrew, we had a great turnout last night at the Seattle Family Office Association dinner. About 45 families with us for the Hoban family's presentation. Went very well. We've launched that now 7 months in here in the Northwest. So thank you for all the support with getting that up and going. It seems like there's going to be more demand for more of those opportunities to create social opportunities, to create deal flow, access to resources. How do you guys see your network growing? It seems like the opportunity now over the next few years is going to be pretty dramatic. Where do you guys see your network going? And if someone's interested in pursuing that, what's the best way for them to look into that, seeing whether it'd be a good fit and the timing would be right?
Sure. The area that we're growing is we're launching more associations in all the major cities where we can build relationships with the local family offices. And then from there, we launch our investment clubs. And the investment clubs are only open to family offices. Each one has about 18 to 20 or so families. Right now we have about 17 or 18 different investment clubs, and we plan to grow that to about 40 or 50. They're based on different regions, different sectors. As I mentioned, we have the Palm Beach Investment Club, we have the New York City Investment Club, the Houston Investment Club. We also have the Biotech Investment Club, the Cannabis and the Technology Investment Club. These investment clubs are where deals are getting done. And to me, that is the most important thing. As we continue to grow, the groups that come to us are companies that are looking to raise money, are tired of going to larger conferences where there's not many smaller families or appropriate investors for them. And they just want to get, we'll say capital raised with as little stress or as little expense as possible. And that's basically what we are building towards. And the best way to get involved is if you're passionate about any industry, any sector, if you're located in any region and you want to be part of whether it's our association or investment club, please contact me. I'd be happy to talk to you.
Thanks so much, Andrew. Margaret, Becky, Dan, please round of applause for our co-investment syndication panel.